underappreciated and seldom acknowledged. And I can add only one thought here. Ignore it at your own peril. It really is time for Africa. Hello and welcome again to our exclusive 4-part series on Ernst & Young Strategic Growth Forum 2012. I'm Shireen Bhan. Now, last week, we began the series with a focus on breakout economies like Libya, the Middle East and Southeast Asia, and the promise that they hold for businesses. However, over the last 20 years, Africa has shattered illusions as it has displayed landmark growth in economic, social and political fronts. As the continent and its 53 countries sketch a new future for themselves, it's time you become a part of this story. So today, we'll take you deep into the African business psyche and help you understand how businesses and Africa can help each other grow.
With some African countries already boasting of a higher gross national income per capita compared to India and China, Africa has shown resurgence in the last 2 decades. Investments into Africa too are on the rise, with a 6-fold increase between 2000 and 2009. The growing economic and political stability, coupled with over 85 million households earning at least $5,000, the coming decade resonates with the words, "It's time for Africa." The saga of Africa's revival is nothing short of awe-inspiring. From a genocide in 1994 to being one of the continent's fastest-growing economies, Rwanda is on the track of chart-bursting growth.
People still view it as not so investor-friendly. People feel that there are still a lot of political instability which will harm investments and investors investing in Africa. Is that just a perception, or is there some bit of truth also to that?
I think a lot of it is stereotyping. Africa is a huge continent with over 50 countries. Each country is an entity by itself, and it has its own unique attractiveness. The whole continent is not a trouble spot. A few areas of instability do exist, just like they exist in other parts of the world. Now, over the last decade, most of the investors that have dared to go into Africa, to beat the unbeaten train or to travel on the unbeaten track, they have had great results on the continent, whether it is companies in telecommunications or pharmaceuticals, whether it is in mining or hospitality, whether it is people investing in equities on stock exchanges in Africa. The returns on investments in Africa have, on average, been higher than on any other part or any other markets in the world.
That's your key role here in India. You are bringing that dialogue for Rwanda with Indian companies and the Indian government as well for investing. What sort of investments are you seeing from countries like India into Rwanda?
Over the last year or so, we have seen investments going into mining, going into telecommunications, going into agriculture, going into health, going into education, going into energy, and we see this trend continuing because in all these sectors, Rwanda's economy is still virgin. The opportunities, whether it is in agriculture or in energy or in tourism or in health or in mining, are still enormous. And that is not just for Rwanda. The same scenario replicates itself across the 54 countries that make up this great continent.
Having started its operations in 1838 in South Africa, the first Rand Bank began operations in India in 2009.
You are first African bank who has set up shop in India. What is the kind of relationship and the kind of interest you've seen from Indian companies for investing in Africa?
I think the interest has been phenomenal. You know, we've seen the first year of investors into Africa many years ago. You know, you have the likes of the Tata groups who've been there for ages. We've seen, you know, of late a lot more interest from pharmaceutical firms, and there is what I would call the mid-cap segment of Indian companies who are now starting to explore Africa.
Marico, one of India's leading companies, pioneered operations in Africa and experienced early success.
Godrej Consumer has been one group which has grown tremendously in countries in Africa, and that has been entirely through acquisition. The perception about Africa is not so great as in terms of investing there. What does your experience of operating in Africa for so many years tell you? What has been the journey there? What were the concerns and how have you overcome them?
Okay, well, so there is a bit of myth and a bit of reality about operating in Africa. And we haven't been there for a very long time. So I'd say most of our investments have been recent. But you know, Africa was a continent which was considered a hopeless continent 10 years ago, and today it's the rising continent, right? So the paradigms about Africa have changed. I think it's early days, and a lot of companies have been looking at Africa. The brave and the bold are already there. So I would say, I think when we look at Africa, we look at opportunity and risk in a framework.
While most companies evaluate expansion with conventional indicators, Africa has needed a new set of metrics to aid businesses.
If we go by the global perception of countries in Africa, the perception still says that the countries there are still unstable. There are still hurdles on regulatory frameworks. How true is that perception, and are there concerns, are there reforms still needed to make Africa a far more investor-friendly continent and countries more investor-friendly?
Absolutely. You know, I heard a speaker today say, when you look at a continent as an investment destination, you either take a view, is the glass half full or half empty? And he said in India's context, it's both. And I would say to you, in Africa is no different. It's both. It's half full and it's half empty. There's no doubt it's a land of opportunity as we see in investments flow. But we asked foreign investors what actually worries them about investment in Africa. And the things they said to us is, political instability worries them, corruption worries them, ease of doing business worries them, infrastructure deficit worries them. Again, you can look at these as the glass half empty or half full. Africa needs about $90 billion of infrastructure investment today. That is a great opportunity. If we go back to the early 90s, there were less than 10 countries that you would characterize as true democracies. Today, there are less than 5 countries in the total of 54 that you would characterize as not being democracies. But that story is not getting out. It's not being told consistently. And I think that perception certainly needs to change.
While optimism exists about the opportunities in Africa, due diligence is what is required to actually take that first step. After the break, we'll go down to the finer details about investing in Africa in this episode of Ernst & Young Strategic Growth Forum India. Stay tuned. Welcome back. You're watching CNBC TV 18's exclusive coverage of Ernst & Young Strategic Growth Forum India 2012. Now, as we stay optimistic and delve deeper into our discussion on Africa, many questions arise about the ground realities that businesses will face. Perhaps the biggest of these concerns is the political instability, civil unrest, regime instabilities, economic hardships and corruption, which are more prevalent in Africa than any other continent. Existing infrastructure can also prove to be a challenge to work with. The quality of roads and reliability of transportation is still a huge issue. The regulatory environment is still complicated and is only now being smoothened for international investment. Now, adding to these challenges is the tax regime and talent issues. But as they say in the world of business, greater the risk, greater the challenges, and hopefully greater the rewards as well.
How is the taxation and the regulatory framework for investors who want to invest in Africa? How favorable it is?
Africa is really a confederation of different countries, and each market has its own tax regimes and own nuances. And you would find some countries a lot more favorable to FDI, and I think the tax regimes are reflective of that, where others are probably a little more rigid and trying to change that. What we find is a lot of Indian investment goes to Africa via countries like Mauritius, which, obviously have a favorable, tax environments, either through Singapore, certain BVI-linked regions, etc. But I think, you know, African governments are starting to realize they need to streamline some of their tax.
By 2020, Africa is expected to have 128 million households with discretionary incomes, and the consumer spending is expected to touch 1.4 trillion US dollars, numbers which no businesses can afford to ignore.
How favorable is Rwanda from the regulatory and taxation framework for foreign investors?
Today, Rwanda rates as the 45th country in the world in terms of ease of doing business. It ranks as number 8 in the world in terms of ease of company incorporation. It ranks as number 19 in terms of ease of taxation. We're continuously innovating to ensure that doing business in Rwanda is as smooth and fast and cost-effective as possible. Even though we are the best country in terms of ease of doing business in East Africa and the second in Africa, we don't think that that is sufficient.
But what is it that you've done in Mozambique? You know, share with us just one or two examples that Mozambique has done, Lorenzo, to attract foreign investment.
A place like Mozambique where the market is a little bit small, we're talking about 22 million. So we have to see the consumer. One of the major issues, we are now building an infrastructure. The government just launched an act for public partnership, public-private partnership, because we realized that there is a gap in terms of developing infrastructure. We have the corridor. We need to get linked with our neighbor. Mozambique has this advantage. But also I mentioned earlier the issue of private sector sitting side to side by the government to identify constraints.
Mozambique is one country where Indian companies have invested quite a bit in the reserves in Mozambique. Which are the kind of sectors that Mozambique has attracted investment from countries like India?
One of the major interests, particularly for India, is the agriculture business in Mozambique, agro-industry. We have already an Indian company invested in the tea plantation in Mozambique. And the major investment is infrastructure. As you know, Mozambique is now very busy with gas and coal, and the major challenge is how we can ship this coal and gas. And of course, India is playing a very good role, particularly in the railway system. We have signed already the memorandum of understanding with some company. They have done already some pre-feasibility study to build railway. And also we need a lot of service. When we talk about service, we're talking about different industry. The banking service is very important because without the financial capital, nothing can happen. So those are the major sectors where India is deeply involved. And of course, one of the major sectors which we foresee to get more investment, either from India or other investors, is industrial park. We need really to put an industrial. We need to add value in all these minerals. So we cannot just get worried to ship out gas and coal, setting up LNG plants, but we need also to add value. And sometimes I say that even without gas and coal, Mozambique can get a very good yield in terms of business because we have logistics. We can service. We just need to build up corridor, put an infrastructure in place.
For Marico, it was far-sightedness coupled with unerring focus and flexibility that helped stay relevant in Africa. But more crucially, it implemented the same ethical and governance standards as it applied in India.
Africa is the largest consumption growth story in the current times. You have established your presence there. What has been your counterparts across the globe? Have you seen, and what sort of foreign investment have you seen from FMCG companies across the globe into Africa?
Well, you know, to be honest, I think the traditional Western multinational companies have been a little shy. about investing in Africa, barring a few exceptions. And I think that's probably because the landscape is still a bit chaotic. Business environment, political risk, regulatory risk, levels of corruption are things that I would say a European or an American multinational company finds difficult to deal with. And to that extent, Asian companies have been much bolder in their investments into Africa. So if it was time for China 30 years ago, or time for India 15 or 20 years ago, now is the time for Africa.
In spite of the challenges that Africa is facing, perhaps the most crucial one is the one of perception. The gap between what is perceived and the actual on-ground reality is a large one. And business leaders agree that one of the biggest bottlenecks in the African saga is that the country is still viewed as one that is an unattractive investment destination. But join us after the break as we bring you insights that will alter your perception. Keep watching our special coverage here on CNBC TV 18. Welcome back to our Focus on Africa. This is CNBC TV 18's exclusive coverage of Ernst & Young's Strategic Growth Forum India 2012. Now, while business leaders are largely bullish on Africa, the continent still struggles with a perception that's hampering investment. Interestingly, institutions already doing business in the continent rank the region as highly attractive, and it comes second only to Asia. Not so surprisingly, businesses with no presence here have viewed the continent as the least attractive. The fact bleats a different story, a story that spells reform and progress, and these trends are repositioning Africa and individual African economies as one that offer a viable alternative to other emerging economies. It is time that this story is retold with the right facts.
The real Africa story is one that boasts of economic output that has tripled since 2003. The International Monetary Fund has forecasted that 7 of the 10 fastest growing economies world over will be African.
How attractive and interesting has it become for foreign investors to come and set up their businesses in Africa?
Ernst & Young conducted a survey earlier this year called the Africa Attractiveness Report, and we took the views of about 500 CEOs around the world. And the message they told us is that outside of emerging Asia, Africa is the most attractive investment destination in the world. And when we look at the growth in foreign direct investment, we see that that story is actually playing out to be true. Over the last decade, Africa's had growth in excess of 20% compound per annum of foreign direct investment. By 2015, it will reach a peak of $150 billion of FDI on an annual basis. Now, these are numbers that are unprecedented. So we're seeing that it's not just talk, but that it's real. We're seeing real capital flow as well.
While the concern about corruption is valid, it must be noted that various African countries are working towards measures to curb the issues. 14 African countries have ranked higher than India and 35 have ranked higher than Russia on the Corruption Perception Index.
We're talking about reforms, but how critical and crucial is a good leadership to get reforms, and what are the kind of reforms that we will see in Rwanda?
See, after the 1994 genocide, everybody around the world assumed that Rwanda would never find its soul again, that we were going to become a basket case. 18 years down the line, the country has become a model state in Africa, or what Shashank calls the model for emulation within the continent. Now, this transformation from the ashes to what some people have called the best economy or the best run country on the continent, or what Shashank calls the phoenix rising from the ashes, has been possible because of a rare quality of leadership that we have had in President Paul Kagame, who has crafted since 2000 a vision for the country that has helped turn the country completely around. Vision 2020 provides for the transformation of Rwanda from a least developed country into a middle-income economy by 2020.
While optimism about Africa is not unfounded, democratization and improving environment for business and positive changes in three key indicators, the human development trends, growing levels of disposable income and ongoing diversification and FDI all point towards a bright future for the continent. Now, over the past 2 weeks, we've delved into the potential in breakout economies and Africa. Over the next 2 weeks, we look into China and Latin America. So join me next week as we take a look at how the Latin American economy can power the next phase of your growth in business. Till then, from all of us here, goodbye. Many thanks for watching. Stay tuned to CNBC TV 18.